Hello guys, and welcome to my first YouTube video. And in today's video I'm gonna talk about some momentum bases in the financial market and how they work basically, and where you can position yourself in this financial market. So a momentum base for me is basically a market that has proven basically demand, and by demand I mean that market has had an impulsive move to the upside and started slowly and steady move towards the rising 5, 10 or 20 EMA. And what you usually see is that when price moves like this towards the EMAs, there are plenty of opportunities inside this correction to the EMAs. So let's say that this is a daily chart. If you jump and let's say the market moves like this, so inside this area on an hourly chart, the price might be looking something like this. Right? So let's say that this is a 1 hour chart. So what I mean is basically that this kind of area, when price pauses like this on the 5, 10 or 20 EMA, is where I want, is basically my key points in the market, where I want to potentially be a buyer, right? If opportunity comes along. So what I basically do here on this basis right here, when the market has had a correction, is that I draw a supply line just like that. So it would basically be this line right there inside, and every time market comes trades above this supply line, I'm ready for potential longs. So every little box you see right here, let me actually do it like this. Then you have inside boxes as well. Maybe you have one here, and one here as well. These are opportunities for you as a trader to go long in a uptrending market, right? So the theory behind this, or my theory behind it, is basically that when demand is being, let's say that this move maybe looked something like this before that, something like this. So what I see here is basically price coming up and has had a correction down, and price is basically accumulating orders here to continue to go up, or basically to continue the uptrend. So these points right here is someone basically pressing the buy button right here, and this someone is in my book institutions that are basically just putting trillions of dollars behind this given asset. And when price has an impulsive move like this is basically me. This is basically price telling me that okay, someone is behind this market, someone is buying this market and wants to buy this asset up, right? So every time the market has a correction down, it could be seen as reaccumulation for sure, reaccumulation or consolidation, whatever works. So basically this is institutions starting to sell this market for them to get a better price in this market to make even more profits, right? And when this occurs in the market, people are gonna try to sell this market because people are trying to get try to sell every high or buy every low, right? So this is when, so basically institutions starts to buy up, sell orders, and that's why you see oftentimes candles that are basically going sideways on the rising 5, 10 or EMA, and moving upwards after that. And I will go in a little bit deeper than that. I will basically explain to you later on why that is. So anyways, so basically when price has moved up from this supply line, or you can say resistance line as well. It doesn't really matter. People are going to try to sell this market. So let's say we have I'm sure you guys are familiar with fair value gap, or FVGs. So people are gonna try to sell this market when the price reaches up here, because it's an order block. It needs to go down, and people are gonna see some resistance zones right here and start to basically sell the market when it comes up here, and definitely start to sell when they see double tops right here, right? And people are gonna sell there, so there are gonna be a lot of selling orders right at these areas here, like thousands of orders just waiting. But what they don't know, the retail traders, is they have not taken in consideration basically what has happened before this correction. So the context is basically bullish, right? Because as we see right here, the structure is holding towards the upside, and this is only a leg for us to continue to go higher, right? So this is pure demand. Like, demand is coming in here, demand is being accumulated, demand is coming in again. Correction to the downside, demand is probably gonna continue up, because the history says that, right? Demand, correction, accumulation. Demand, correction, what's next? Accumulation, and probably upwards. And same thing happens right here, probably. Demand, correction, accumulation, upwards. And we continue that up moving trend. Okay? Anyways, so this, when people are trying to sell this, what oftentimes happen, you see price soars much higher and much higher, because when people are trying to sell this, all these sell orders becomes liquidity. So it's like liquidity cloud above this whole area right here. So every sell stop, every seller gets liquidated, and they are stuck. Basically, they get stuck because they're gonna try to sell here and predict every top again. Okay, market is moving down. Maybe we had like a liquidity grab, and now it's the time to go short, right? But the market soars much higher, and they are stuck and losing a lot of money because they get the trend wrong. So instead of shorting these corrections when the market is moving towards the upside, you should definitely look to be a buyer. But so the context when trading any asset is absolutely key to trading. And I'm gonna show you how you can simply be a buyer in a trending market using this momentum basis. So let's delete everything there. And I'm gonna show you as well, like this momentum basis, how they actually form. So as I showed you a couple of seconds ago, we have an up moving market, it's trending, and we have had basically demand all over this market, right? And now we had a bigger correction. Basically, the market is consolidating, going sideways, reaccumulation for the purpose of moving higher, right? So after this sideways action right here, as you can see, the market starts to create these bases when we come outside this area. So the first base is basically here. This is of course in hindsight, but the purpose of this video is just to show what's out there. So you basically have your first momentum base right here, your second right there, maybe this is the third, and this is the fourth, right? And inside of these bases, let me take, let's say, 1 hour. You can start to see it. Maybe it's even more clearer if I go down to the 50-minute. So this is the first base right here. So let's draw the supply line as I showed you. Like the supply line can be just over this, basically like this. There are no right or wrong way how to draw your supply line. This is just a visual thing for you to see. So it's much easier basically to see where basically a reaccumulation can take place. And you have this huge upside candle. And as you know now, people are gonna try to sell this market because we have had a correction. And this is basically a resistance zone for retail traders. So every time market comes in this zone and taps it, people are gonna try to look for sells. So basically when price is reaching above the supply line and you have this huge momentum candle, this is absolutely key. You can simply just buy stop this, protect you under these lows right here, and you're good. And let's say that your system says that every time market comes to 1 to 5 in RR, you take a profit. Alright, so let's record it, +5. And now it's the second base. Let's look inside of it on a 1 hour. Alright, so you have this supply line, draw it right there. And, or we was actually on a 50-minute. So let's be consistent with our time frames as well. And you have a resistance line here as retails think. So this creates, remember, a lot of liquidity above this. This is why you see price soar much higher when price reaches this zone right here, where people are trying to sell the price. Same thing here, a lot of liquidity above. These retail stop losses become liquidity for us to the upside. So every time price comes over the supply line and you have huge momentum, you can simply buy this, throw it under this low or this low, doesn't really matter. Let's throw it under this low. And every time market reaches 1 to 5, you simply take a full close. That's +5. Let's move on. Okay, so we have another correction down to the EMAs right here. Let's check it out. Okay, so the supply line is not so clean here, as you can see. The price just drops and drops and drops. This is like what we are used to see now, right? Price moves slowly down to the EMAs, kind of sideways, and every time price comes there, like a little bit above the supply line with good momentum, we simply buy stop and protect under the low. So if we just drag this along this, do you see it? Not really. So maybe this is a reason for you to skip this correction down to the EMAs. You gotta be consistent with every trade you take, so it's basically much easier for you to trade. So I'm not even gonna force anything here. If you want, you can force maybe like something along these lines right here, or I don't know. So maybe this is a reason for us not to touch this. Okay, and now price comes here up as well. You can see this, just like that. Okay, so let's draw this line right there. Sure, let's wait for a momentum now to the upside. We want a huge candle to the upside that shows that money is behind this. I would say that this is a huge candle, so let's buy this and see if it taps us in. We protect under the low of this candle, or a little bit under. It taps us in and taps us out. Okay, so let's record this as well. Recording your trades is part of trading. This is absolutely key to get better and see things on repeat over and over again. This is how you teach your mind to see certain things, right? Super important. So always take pictures of your trade. And yeah. Alright, so let's jump down on the daily here. Nothing really to see here. Price just fails under all the EMAs here. So this is basically when price fails like this, or under all the EMAs here, the demand that was being created here by large institutions is basically not in this move anymore, because you can see it for yourself. It's like a visual thing. Price pauses here and continues on, pauses here, continues on, like holding up on the rising EMAs right here, selling down very slowly because institutions are entering this again and again to make even larger profits, right? So this is basically telling me that, okay, institutions are no longer with us in this market. So let's wait for new, basically, momentum, or for this price to accumulate, right? So price soars higher here and pauses on the EMAs right here. So we basically have a, you can call it like a reset in a price. Price resets, comes down to the 50 EMA. This is a 50, 20, 10, and 5 EMA. Price starts to get momentum again and pauses very slowly. You can see like these candles are pretty much wicky, but not that wicky. So I would definitely be interested in this move. So we have a supply line, right? And this pause is pretty consistent with this pause and this pause as well. You can just compare it, right? Like, yeah, well, you probably see it. So if we get a big candle to the upside, we're gonna buy it. This is not it for me. Okay, I think this is much better, so I am willing to put buy stop right there and protect under this low right there. We're tapped in. All right, so now we're waiting 1 to 5. Let's go back to the daily time frame, and we can see clearly the momentum up, a little bit wicky, so that's maybe a reason for you to skip. So let's jump down to the hourly here. This market is going sideways right here, as you can see. Let's wait for our rules. This is clearly consistent with our previous trades, as you can see. And this is a big candle to the upside, so I'm willing to put risk on this. Just protect under that candle. Okay, so we get tapped in and tapped out immediately. All right. So there is nothing really for us to do here. We also take a -1 here. So let's record that. All right, so let's see a pause right there. All right, so you have this sideways action again and a huge candle to the upside. Let's protect under these lows right here. I think it would make sense to just have your stop loss right there. So we take a -1 again. All right, so price comes even lower, right? So let's see a pause right here. Okay, so price basically fails to uphold itself. As you can see here, we started to trade here because we got a little bit of momentum inside of this, and started to trade here because we liked how the price basically sold off to the EMAs right here. So now we are basically having the same cycle here play out here. So now we just wait for a pause on the EMAs. Alright, so we didn't really get the pause. The only pause we had was basically this, and I didn't really see it, so we skipped it for that reason. Okay, so price pauses on the EMAs right there. So you basically have this. So I'm fine with trading this if price comes over that that candle high there. So we are tapped in and we tapped out. So this is -1 as well. right? So price is basically failing down. So this basically tells us that institutions is no longer with us, that we just wait for reaccumulation here. And price basically pauses right here again. So let's see if we have a supply line. So we just wait for, all right. So there we go, protect under this candle low there. This pause is very consistent with our previous pauses. So we didn't get tapped in. So let's just move on. So price is just selling off right now. There's nothing to do. So prices experience kind of a deeper flush, I would say, a deeper correction, which is fine. So let's just wait for price to show us what it wants to do. Comes up here above the EMAs, as you see, with huge momentum. And this is what we want to see. So we basically look inside for 1 hour. And we want a little bit deeper flush. So we have right here something we could look. Let's see on the daily how it looks. So we are passing very nicely on the uprising 10 EMA. So let's see if it's consistent. I would say it's consistent with our previous pauses. So let's take this trade. So we didn't even get tapped in. So now price is just going much lower. Okay, anyways, let's check the data on this. So we had how many trades? We have basically 1, 2, 3, 4, 5, 6, 7 trades, and basically plus 10, and 1, 2, 3, 4, 5, minus 5. So 5 losses and 2 wins. 5 losses and 2 wins. And we're basically, we're still profit, right? We're plus 5 in profits. So, but this is only me trading these momentum bases. Of course, there are other concepts as well that I will teach, but this is just how powerful these bases are, basically. So if you get a trend right, which you will do when you learn about all the concepts, you will be in the, like, what I mean by that is there's huge potential for you to make, let's say that your first partial is not plus 5, it's plus 10, or it's 1 to 10, right? Then this would be a 1 to 10 easily, right? And this would be a 1 to 10 easily as well, because price never comes down right here at these points right there, not even close. We came right there, but we never came to our stop loss, right? So basically what I mean is there's so much potential. And let's say you even, maybe you have a rule for yourself that says, okay, if price reaches 1 to 20, I'm closing the full position, right? So this both trades with you risking 1% is basically 20% up on that one single trade, or 20 RR. That's huge. That's 40 RR minus 5. So plus 35. That's huge. So imagine a 100,000 K account. That's 35K right there. And that is basically what most people make in a year, if not even less, right? Or maybe that's the average, I don't know. It depends on where you come from. But 35K a year is great, right? And you made it in, let's say if you took 1 to 20, both of these, basically you would enter this and sell both of the trades right there, you would make it in 150 days. So that's huge. All right, so let's look at more examples on this. Because these bases occur everywhere, right? So market flushes down right here, as you can see. Market moves down here, and immediately when market comes up right here and passes, we could simply just check inside these boxes right here to see what's to see if there is opportunity, right? So market moves sideways right here. So this would fit our previous rules, right? A little bit above the supply line and a strong candle to the upside. It could be this. This is the first candle to the or above the supply line, right? Yes, protect under these lows right here. Market never comes to tap you out. And let's see it right here. Supply line right there. Market has a deeper flush. Strong candle to the upside above the EMAs. You protect under these lows right here or under this low. It doesn't really matter, right? Same thing here with this base. You have the supply line right there. Market comes up, strong candle. Maybe you put it there. Maybe you protect under this low right there or this low right there. I think for our consistency, we probably protect on this low, and that's a -1. Same thing here. Market comes up, we need a strong candle, so this is the first strong candle, and this is consistent with our previous bases. And you basically, yeah. And look, every single one, except this one, is a winner. And look now how this game changes everything. So let's say your trade was 1 to 20. You're not touching this trade until it comes to 120. These trades works out. These trades work out, and this trade work out, and this as well. Let me check, double check. Yeah, well, this was a -1, so let's just record that. -1, but every single trade, this one, and this one works out. And imagine if you said that your rules are, I am only gonna sell if the market comes to 1 to 20 in RR, right? So every single one of these would have made you 60 RR with a tiny -1, right? So basically you would be up 59 RR in how long? So basically if you take this and this, so 146 days. So ask yourself as well, would you be fine with taking 146 RR out of, or 59 RR in 135 days? And the answer is of course you would be. That's crazy. But the potential, as I said, is wild in this market, and this momentum basis is just the top of the iceberg, really. I will go deeper on this stuff as well, but I just wanted to basically hop on and upload this video for you guys to see for yourself what's available out there. And remember as well, like you can even go back in time by yourself and look what's available, right? Like look for these bases, look for a strong move to the upside and a pause on the 5, 10 or 20 EMA, and look to get involved inside of this area, just as I showed you. I look to trade something inside of this, or you can even trade the base right there. Like look, you could even like just basically you just wait for a push up, a strong push up, and just wait for a pause on the 10-20 EMA, and just simply protect this whole low, this low right there, and have a buy stop set up on that high right there. Every single one of these would have worked out. Every single one of these. This would have tapped you in and tapped you out. But look at this. If you would have protected under that low, or this, or even this, or this, or this, every one of these would have worked out. So take pictures of this stuff and record this data for you, and you will see your progress go. Like, there are like no limits of how far you can reach in just like recording pictures of this stuff and just seeing what works and what doesn't work, right? So yeah, I will definitely keep uploading on the YouTube channel and just keep learning about a few different concepts, so this momentum basis comes more clear, and you can basically guide yourself through the market, right? All right, so thank you guys for watching, and I see you in the next video.